Hey everyone, here is a story that I don't think I've told before. So it was back in the spring of 2023, and I wanted more Bitcoin. Bitcoin had just come off of a low of below $17,000, and it was climbing into the low $20,000. And I still had some meaningful assets managed by a couple different financial advisors, one in particular. And I really wanted to put those financial resources, meaning US dollars, which was in the form at the time of stocks and bonds and US dollar cash. I really wanted to buy more Bitcoin, but I couldn't figure out a trigger. Like there was no good justification other than the fact that Bitcoin was a better investment. But I already had, I had already moved a lot of assets over to Bitcoin. And so I was sitting at maybe as a percentage of my total net worth, I was sitting, probably somewhere between 50% and 60% in Bitcoin. But I really at the time wanted it to be closer to 80%, but I didn't have sort of a good trigger to get there. And so I'm waiting and I'm wanting. And at the time I was sitting in the Mississippi legislature. This was wrapping up the 2023 legislative session. So it was late it was either March or early April or something like that of 2023. And I saw an alert come across that funds had moved in a Charles Schwab account or whatever it was. Anyway, and that, of course, happens anytime you have a managed fund. They're always moving things around because that's what they do. They manage it and they charge you 1% or 0.75% or whatever it is. And I saw that a substantial portion of the assets that this financial manager still managed had moved from a variety of assets to a specific asset that I had told them I never wanted to own. So back when I set up this financial advisor back in 2014, right after I had sold Baumgar Corporation, I set it up with multiple financial advisors, but this was one of them. And I said, look, y'all can manage it. Y'all, do your thing. They're going to charge 0.75% interest, or not interest, but that's their management fee. Some places it's less than that. More than that. Usually it's 1%. But in this case, if you were above a certain threshold of assets under management, meaning if they were managing enough assets for you, it was 0.75%. So I told them, look, y'all do your thing. This was back in 2014. You do your thing. You get your 0.75% every single year, regardless of your performance, because that's how it works. But there's one thing I don't ever want to touch. I don't ever want to touch U.S. Treasury bonds. I am opposed to U.S. government debt, and I don't want any of it. So do not put me in anything that exposes me to U.S. government bonds. Well, what had happened over the 10 years, of course, people forget, presumably breakdowns in systems or whatever. But on that morning in the Mississippi legislature, the alert that came across was that at Charles Schwab, they had moved a substantial portion of the assets they were managing for me to some sort of a fund that held exclusively U.S. Treasuries. Basically, it was a 100% government debt fund, which is literally exactly what I had told them I would never want to own. Now, the reason they did it was because that fund at the time was paying more than 4% interest, which is basically the government just borrowing money and printing money and paying it out, which is all sort of fake money, but, anyway, whatever. But anyway, so when I saw it come across, I was both slightly annoyed and simultaneously exuberant because I was like, this is exactly the trigger I need. They just tripped a red wire. They just moved me over into almost exclusively a government debt fund to try to chase this, 4% interest when I told them I wanted zero exposure to U.S. government debt. I mean, frankly, I'm opposed generally to debt at all, but especially especially government debt. Why would I want to invest in government debt? Like, I am philosophically and morally opposed to government debt. So anyway, so that was exactly the trigger I needed. And so, I immediately called them and told them to exit that fund, that I did not want any part of U.S. government debt. And within, I think, the next day, I was in the minivan with the rest of the family, and I asked them. I said, "Hey, kids," I told them the story real quick, just like I'm telling you now. And I was like, I am considering pulling 100% of the funds that they had invested in this government debt fund and pulling them out completely, moving over to Coinbase and putting it in Bitcoin. And then, of course, subsequently pulling that Bitcoin into safe cold storage custody. My recommendation, of course, BitKey is where you keep Bitcoin long term for safety and security and all of that. So I told the family, this is what I'm considering doing. What do you think? So one of my kids was sort of opposed. They were like, Dad, you know, you already have a lot of your assets in Bitcoin and you're just buying even more Bitcoin. You know, this just doesn't seem wise to have, you know, you're moving your percentage ownership of total liquid assets from, you know, 50 or 60% Bitcoin up to like 80% Bitcoin. So one of the kids was opposed to it. You know, one of the kids really didn't have an opinion. One of the kids was maybe slightly in favor, and one of the kids was sort of a little more in favor. And Rachel, my wife, was like, great, like whatever, you know, you've served us well with your financial acumen, so do what you think you need to do. So, of course, exactly what I thought I needed to do was buy more Bitcoin. So I immediately reached out to the financial advisor and asked them to wire all of the funds to Coinbase, which they did. And then I bought Bitcoin in two tranches. The first, anyway, in the time that it had taken to move everything over, the price of Bitcoin had gone from the low 20,000s to mid 20,000s. I think the ultimate orders executed at like, you know, 27,000, 28,000, something like that. So as a result of that, I was able to successfully move up to about 80% of my liquid assets in Bitcoin. Now, right now, that number is 97% because since then, back in, you know, just sort of tail into spring of 2023, I have moved even more stuff from more places and, you know, on more occasions into Bitcoin. So I've bumped it from 80% up to 97%. But at that point, it was bumping it from 50 or 60% up to about 80%, and at a price of in the sort of mid to high 20,000s, which of course is almost quadrupled in value. Now, had I left those funds over with the financial manager managing them, first of all, I would have lost 0.75% every year because that's the fee they charge to manage those funds. And second, the absolute most I could have possibly gotten from those funds was, I believe, about 4%, which was the interest on the government bonds that they would have invested in them in. So I'm super thankful they made that mistake because it resulted in me buying a lot more Bitcoin, and which made me a lot more happy with my allocation of financial resources. And that is the quick story of how a financial advisor's mistake resulted in some funds lost for them because they were no longer managing that money, but a much bigger gain for me because I moved all of the assets that they had invested in government bonds over to Bitcoin at a price between 25 and 29,000 per coin, which is almost quadrupled now. So have a great day, everyone. And I'm always here for anything you need on your Bitcoin journey. Thanks.